Well, guys, for those of you who don't know me, my name is Jamie O'Brien, real estate investor. I was here when this was started 6-7 years ago. Brian asked me to fill in tonight. He's at a baseball game for his son. He'll be here in just a little bit to take part and connect with everyone. So if I don't know you, pleasure to see you here. Glad you guys are here. If you haven't scanned this code yet, go ahead and scan that. I ask you to put in your information. Stay connected with us. That's one of the big things that Brian talks about is connection, being connected with others to help us grow in this world of real estate investing. I think that's what we're all trying to do, and we know we make that through connections. Wanted to kick this off with a really dumb joke, but I figure a little bit of humor goes a long way. And so why did the real estate investor bring a ladder to the meetup? Anybody? Anybody? Because they heard it was a great place to make high-level connections. All right. Very good. Thank you. I appreciate it. I'm glad we got a laugh. So scan this. This will keep you connected. Get on the email list so you won't miss anything. Alleria coming through. So why do we exist? We just talked about this. Connections, right? This can be, in my opinion, a lonely world, right? Not everyone understands what we're out trying to do in real estate. Sometimes it can be a little non-traditional. And also just I've seen a lot of deals done in these rooms, a lot of connections. People are doing a whole lot of different things, right? Brian likes to go around. If you're wholesaling, raise your hand. If you're wholesaling properties. Who's looking for properties? There you go. Connect, guys, connect. Get on people's list. That's the only way we're going to grow together and faster is by being connected. Train. I believe Brian puts on some training events. He has more details on that and exactly when that's going to be, but he does want to train us, right? He wants to provide education. If you're newer to the real estate investing world, how can we help you kind of grow faster, right? And then grow. We just talked about that. How do we grow together? And I think we do that through these two things, through connecting and through training, right? Let's grow together. Cool. Next Board of Advisors meeting, small group, right? I think we grow really well together in a big group of people, but I think when we make it smaller and get a lot more intimate, think small masterminds, that's really where we can grow faster together, right? And so I think he gives this to the opportunity for everyone to join one of these at no charge. All you have to do is reach out to him at brian.trippe@gmail.com. Next one is going to be Tuesday, February 18th. Is anybody in that group?
That was a couple weeks ago.
It's going to be March something. I'll let Brian tell you what that is. I didn't look at the slides before we got started, obviously. But I think that runs, has anyone been to one of those? It runs from like 9 to 12 or March 18th? Okay, thank you. March 18th. It's usually like 3 or 4 hours. You guys been to that? Anybody been to that? All right. Another thing for Brian to tell y'all when he gets here. Should have got more information. He literally told me just go wing it, have fun. So here we are. Our next meeting in this room will be Tuesday, April 11th. I know that is accurate. So we'll be in here just like tonight. Doors will open about 6 o'clock. Spend an hour networking, getting to know each other. We'll kick it off right at 7 for whatever he's going to be. He didn't tell me who the next speaker was, but I'm sure it's going to be someone good. Always is. And then just want to give a special shout out and a thanks to our partners, to our sponsors. This room costs money for him to put it on every month. To provide waters and everything else we couldn't do without the sponsors. So big shout out, go see these guys. Everybody's doing something in real estate. I'm with Strategic IBC. If you want to control your cash flow in the infinite banking concept, come talk to me or Ernie. So, all right. So what you guys all came for, let's get our panelists up here. I'm going to introduce these guys. Y'all can just come up, have a seat. Christina Kallaher, she's a realtor, rehabber, property management. I'll let you guys go through and probably introduce yourself a little bit better. We have Lindsay Davis. Lindsay's the CEO of Spartan Invest. They do a volume of rehab properties, sell them turnkey mostly to investors, and run the property management for those investors. And then we have Bruce Glenn. Bruce spoke here. There he is. When was that, Bruce? When did you speak here? A few months back? Last year sometime? Anyways, Bruce has a wealth of knowledge and experience. He rehabs properties as well. He's an appraiser by trade and has been in the game a good amount of time. I like to say has a lot of life experience. And then Matthew Gregory. Matthew flips 60 to 100 homes a year, right here in the Birmingham market, 1,500 plus rehabs since 1998. Also has moved into some storage facilities and single family rentals. I didn't pick the picture. Yeah.
Straight off Facebook.
And so the idea, guys, what we want to do is really just kind of go around for the panel, get a market update. What are they seeing? These guys have a wealth of knowledge, are very well connected in not only Birmingham, but the state of Alabama, and just kind of give you an idea of what's happening. You know, there's a lot of noise in the marketplace right now. So what a better panel than to get some ground floor information from as far as what's actually happening. So guys, I've just got a couple quick questions for you, and then I want to open up to you guys if you have questions. This is going way too fast, so I'll slow it down a little bit. First one is just market updates, just some market trends and shifts. I've got to give y'all a microphone here. And so you guys don't have to hold this right up to your mouth, but just pass that down. And we'll just go down the row and just get an idea of what's going on. And so we'd love to just start, Matthew, if you want to start, kind of what key trends are you seeing in the Birmingham real estate market right now? Mainly, you know, some ideas like are home prices stabilizing, going up, going down? What are you seeing when it comes to
hey guys,
Birmingham market?
Can you hear me?
Do you want the microphone? That's not going to project voice. Yeah.
So
if you want.
No, I don't need that. It's fine.
Okay.
So I guess the market is a little weird, right? I think some people are doing well, others are struggling as far as realtors are concerned, I think.
You do have to hold that up so the camera can capture it. Sorry.
Okay. Okay, thanks, man. As far as my business, I think we're doing a pretty good job. We're moving properties. We're not moving all of our properties quickly like I would prefer, but we're moving. We have a wide range of houses we're trying to do right now, and some move really well. Some take a few weeks to sell, and some takes a few months to sell. So I really haven't figured it out yet. I don't know if I ever will, but we're trying to get there.
All right, awesome. Christina, you're a realtor, run property management, do some rehabs, right? What are you seeing right now?
Weird market, very weird market. Foreclosures are down. I also do REO foreclosure. So REO is way down. We're not seeing a whole lot of that. We're seeing a lot of purchases off the market. So not everything is what you're seeing is MLS. I know y'all probably see that, but it's a lot more. People are wanting to not even put it on MLS. That's what I'm personally seeing. So that's kind of a plus. Days on market or more for sure. There's some little weird pockets that I would have never thought in a million years that are selling faster than others. Of course, Hoover, Vestavia, some of Trustful has really actually kind of slowed down. That's the biggest thing. And I am seeing this weird shift where investors they're struggling because of shoddy work. So like these two do a great job and they just sell faster because they know their quality, they know it's good. I am seeing lower end that they just kind of do this crappy work and they just sit on the market longer. So I am seeing that. People are noticing it. In rental, the biggest thing is some landlords are wanting to go up on rent. I don't agree with that right now. I don't think you should go up on rent right this second. That's the biggest thing.
Can I ask you a follow-up on the REOs? Just my own personal curiosity. There was a lot of noise about all the forbearances and stuff through COVID. Are we through that, or do you think there's more REOs coming?
No.
What do you think's happening there?
So here's kind of my thought process, and this is just my thinking on it a little bit, just dealing with some banks. The 08, 09 and all that, they didn't know what was happening and everybody was scrambling and everybody just went into foreclosure. They figured it out now. So now they are doing the forbearances and they are putting it on the back end. So I don't think it's going to be anything like it was. What you're going to see, the biggest in foreclosure world are reverse mortgages because people are passing away. We have the baby boomers and then they're just passing away. So that's where I'm seeing an increase. Is that, or, yeah, I mean, very few forbearances. They just keep adding on.
Okay, great. Lindsay, you want to speak maybe to general market? I know you guys do stuff all over Alabama, and you're in Tennessee and some other states, right? What are you guys seeing from maybe the investors y'all are working with? Is there any shift there? And then your house prices and rents would be awesome to hear about.
Yeah, so we're kind of just in a couple of different areas when you're looking at how the market is. If you're looking from the turnkey side, so we're purchasing properties, renovating them, and then we're selling them to investors. Sorry, that was weird. Majority of our investors are outside of the state of Alabama, and so we really saw. I can't speak apparently. Yeah, I'm going through puberty, I guess, maybe. I don't know. So we saw a big part of our slowdown and right as interest rates started to increase. So from July 2022 to here recently, oh my gosh, you're an angel. Thank you. I appreciate it. We started seeing, that's where we had the biggest decline in investor activity. And I think across the board, investor activity was down about 40%. And whereas on the owner occupant side, those were great years, things were still flying off the market, whereas our clientele was really struggling. And we've kind of seen the inverse as there's been a little bit more rate acceptance with investors, and we've really seen an increase starting at the beginning of 2024 in just investor purchases overall. And in fact, we had a really strong end of year last year. Now, on the flip side, since we also do the property management piece of that, our property management company, Atlas, we're going through the same seasonality that is pretty common. We were very slow at the end of the year. Last year, we're picking back up with tax returns on the leasing side. I completely agree with you. Please, if you do have rental properties, be hesitant on increasing the rents. We've seen a pretty decent increase in our eviction rates. A lot of that goes to just the inflationary pressures on just your normal family. And increasing those rental rates are going to push that, they're going to continue to hurt. And whereas discretionary income is just not as abundant as it used to be. So I would completely agree. I would hold off on that. We've tried to change some of our leasing criteria to help our investors weather the eviction storms and come down really hard and try to put things in place to help with that. But yeah, that's a trend that we are seeing. And I know kind of across the board in property management that's a pretty similar trend outside of just Alabama.
Yeah, so hearing you say if you're going to be buying rental properties, not a time to think that you can push rents. We got to be really good on our numbers there.
I would be very hesitant about it, whereas you could easily increase 8 to 10% in 2021, and Alabama's rents have been historically very reasonable, and you usually see about a 3 to 4% increase year over year in the areas that we're in, not necessarily in your Hoover and Vestavia and Mountain Brook. We're in kind of more the sub-markets of Birmingham, but I would be just very cautious about trying to push the limits if you're wanting the steady cash flow and to keep a decent tenant in place. I would just be really hesitant about that.
Awesome, thank you. How about you, Bruce? Doing a good amount of appraisals. You also rehab and flip properties.
Yeah. First off, from an appraisal point, probably over the years, in the last few years, probably 90% of my appraisal work has been retail sales or refinances. And before I came tonight, I went through and I counted the appraisals I've done this year. And it's a little over 50 and 7 retail sales out of 50 some odd appraisals. So I am not getting hardly any. Do what? No, everything I'm doing is I'm doing a lot of investor stuff. I'm doing individuals, unique properties. People are trying to find out what their value is or they want to put on the market. And then unfortunately, I was telling a couple people that I do work for bankruptcy attorneys. And I've done this there's about 3 attorneys that I work for 15 years. And usually one a month or something, not much, one every couple months. And I'm getting 1 to 2 a week now in bankruptcy appraisals. So that has been a huge increase. And I'm talking to one of the attorneys and he's expecting more, and they're sending it. Unfortunately, I mean, it's keeping me real busy, but unfortunately I'm seeing a lot of that. So anyhow, basically retail sales are everything I'm seeing is slowed up a whole lot, and I kind of did some numbers just to see how many sales, like in Jefferson County, before I came in the last couple months. It was like 7,300, 7,400 in Jefferson County sales. And when we went through the recession, I pulled those up, and they were down like the 65 to 6,700. So we're not many more sales than what we were after the recession. So now, one thing is interesting. You're talking about off market, not through MLS, which could be a lot. I don't know how much that is. So there might be a lot of that going on that I don't know of. But just in general, it's slowed up a lot for me, retail stuff. So, and one last thing too about flipping. I've seen, because I do a lot of investor stuff, and if you're doing it, I can't emphasize enough to do a decent job, because it's going to cost you in the long run. I mean, I see these things sitting, and I go look at them, and an investor says, "Why was I not selling?" Well, you walk in, and it's the workmanship is just really shoddy. So, I always try to be, and I know Matt's tried to be the nicest on the street, the highest one, and that's just, to me, then you're not going to have to worry about sitting there. So that's just
Yeah. Awesome. I'm going to come back to you. We'll start down there, Bruce, if you want to kick off the next question.
Sorry.
And I forgot to mention this. Bruce was here talking about the book you wrote, First Flip. If you want a free copy, I'm going to find a way to give away a few tonight, so stay tuned. I'm still working through that in my head. Again, I'm just winging it as we go through here. All right, guys. Thanks for that. That was great. Next question. Where do you see the opportunities right now in the market, and potentially we're all projecting a little bit on what we think is going to happen. Where do you see the opportunities potentially here in the next 6 months or a year?
That's hard. I mean, it really is hard, because, so my retail sales, the ones that I've been doing, are in upper end, the Homewoods, the Vestavias. Most of those areas are what the retail sales. However, I've flipped a few in, areas that you wouldn't think, like a little bit outside, like outside of here, Concord, out to the west side. Some of those areas outlying areas, people love, but you got to get the deal. I get people calling me all the time, showing me stuff, and I'm just not going to buy something unless it's a real deal. I mean, because I don't want to get stuck 6 months from now so I have a lot of room in there to sell it for whatever. So that's just my opinion, but it's hard to pinpoint areas, because, I'll see something selling a heartbeat, and then there'll be 4 more sitting in the neighborhood that haven't moved, and they're sitting in the market for 100 days. So I wish I could tell you an area. Matthew might, he does a lot more areas, but, yeah.
Yeah. Great. What about you, Lindsay?
Okay.
What do you see as potential opportunities here in the next 6 to 12 months, or maybe even expand the question, biggest challenges we may see?
Well, I think kind of what Bruce was saying as far as opportunities, that's really hard to gauge, just because there is a lot of uncertainty right now. I would say from an investor standpoint, and I actually had a couple of calls with investor clients today, and they asked very similar questions. And the opportunities that I would say would be to look a little bit more on the outskirts of your prime markets, your subprime markets. Like if you're in Birmingham, we're targeting rental properties, right? So our main areas a lot of times are Pleasant Grove and Hueytown. And so I would say looking outwards on more of a Concord, there's a lot of opportunity there. There's Birmingham is an easy commuter stay. I mean, you guys know this, right? This is the spiel that I normally have to give investors when they're looking to invest in Birmingham, and they're like, well, I don't want to buy anything that's 30 minutes away. It'll take you 3 hours to get there. It's like, well, not necessarily here. It's actually just a 30-minute drive. That's not that bad. So we really try to push the opportunity for investor clients to look a little bit more on the outskirts. You've got a lower rent, and we've seen our property management company, we've got about 2,000 doors under management, and we've seen the stability in your more rural areas with our residents, and that they're just less likely, and I don't have exactly why, but they are less likely to go through eviction or more likely to renew. We've got about a 10 to 15% higher renewal rate for those smaller communities. Do you want me to say the challenges one, or keep going?
Yeah, we could keep going. That was great. I want to ask a follow-up on it.
Sorry.
Something just popped in my head. Again, just trying to make this kind of casual conversation. Is you mentioned earlier higher evictions, but we also know that there's inflationary pressures on people buying houses. you have any thoughts on that, on just rental market potentially being like a great opportunity, just knowing how are you guys, I'm trying to think of the right question here. How are you guys kind of hedging against the evictions and finding the great tenants? Because they're going to be out there that maybe want to buy a house but can't right now.
Absolutely. I think with the housing market being as high as it's been and affordability in general, it's going to naturally push more people to rent properties, but you still have a lower amount of inventory available. And then you're also looking at the residents that are lifelong tenants, and where I think the affordability piece is going to drive more people to become tenants that may not have been their original path. Whereas if you're looking at lifelong tenants, their affordability changed while they were in their current lease and while they were going through natural, lease increases. And something to keep in mind is that, every tenant is about one life event away from eviction. So if you've got one thing that's happened, it's going to push them over. Whereas a lot of investors, you're not necessarily on that borderline. So it's a hard line to walk. And not to go on a tangent, but that's probably the most frustrating thing, is that we've done deep dives into why people get evicted. Is it something that we're approving? We've done like, hey, okay, so if their credit scores or length of stay, criminal record, what commonalities do they have? And they just don't. We didn't find not one thing that was over 25% of the break. So it's like if their credit report was from 500 to 525, 525 to 550, how more likely were they to get evicted? And it was extremely inconclusive. It was very frustrating.
Yeah, I imagine. Okay, great. Thank you.
I agree with them. It is very hard to nail down a specific area. I'll tell you some in a little bit that I'm kind of seeing. I guess the tip I would tell you guys is, if you can find a house that is close to a desirable school district or even a non-desirable school district that's walking distance, that is a really big deal to families with kids. If you can find houses close to bus lines, I'm seeing that's a big deal for our lower end tenants because they don't have the means of transportation. And that is, to me, a big thing. Like, well, they'll get up and they'll go on the bus and they go to, so that's a big thing. So if you can find that, I know that's weird, but that is the truth. If it's walking distance to any school, that's kind of a little trick. Okay, then the areas I'm kind of seeing a little bit shift, an odd shift, is West End has gone up a lot. I'm interested, I want to watch the Winona Ishkuda. Have you seen that at all over there? Okay. So there's just this little area. Do you know where that is? Winona Ishkuda. What am I up here with? God, does anybody know where Winona? Okay, girl, you got it. That is just a great little pocket. Those houses back there off Winona Circle, that is a great neighborhood.
Where is this?
I'm not telling you.
Tell me, I want to know.
They're just great. They're just great houses. It's in a little pocket. I want to watch that. I want to watch, y'all are all going to go, what? Brighton is an odd one. It's in a little pocket too, and it's right outside of Bessemer. Bessemer is kind of oversaturated. I'm seeing that.
What just haven't moved out of Brighton yet? They used to be.
Yeah.
Hey, what price points are you seeing over there in East School?
I mean, if you drive around there,
Yeah, I know.
you can buy, I mean, I'm seeing 10,000. I think you could find something, but the houses I'm talking about are probably about 120-ish. I don't know. I'd have to see, and then we'd have to play with the market over there and then get our appraiser. And then there's just some little pockets here and there. There's a little pocket between Trustful and Medical Center East, whatever it's called now, and it's really considered Irondale.
Roebuck Plaza.
Thank you. Well, no, before that.
I've got a house there.
Highway 11, you know what I'm
Yeah.
talking about? Why nobody's touching that, I don't know. That's just a cute little.
I've got one there.
You do? Yeah, it's just a cute little, there's just little, if you can find just little pockets nobody's touched with these little bitty houses, a lot of people don't even want anything big. They just want their little space, 2-bedroom, 3-bedroom. If you can buy a 2-bath, great. 1 bath, fine. Add a half bath. What was the other question? Challenges?
Yeah, just if there you see any challenges or anything.
100% with evictions. They are one major emergency. What'd you say?
Can I speak? Sure.
Yeah.
So some of you guys know me. I got rentals and stuff, and I'm not trying to flip. So right now, I've just been kind of enjoying my cash flow and working on optimizing and fixing up what I have. I got an invitation last year to go work with Rent Monster downtown. They're a leasing service, so I do a day, 2 days a week there, just kind of get out of the house. They're hippy-dippy like me, so it's a good fit. And being the kind of person I am, I track all my KPIs for every interaction with every person. And I can tell you after about 10 months of doing it, probably about, I don't know, pulling in maybe 50 or 60 leads a month. And that's just through their organic marketing. And I'm being lazy as hell with it. So just the data that comes in off their marketing. And figure 10 months, 60, maybe 60 leads a month. My average is about 55% have either credit too poor to get into a home or evictions. And it is like, I thought maybe it was just, this is just beginner's luck. They're sending me all the crappy stuff. It's rough. It's getting bad.
The other challenge.
As high as 75%. And I mean, no skin off my back. I'm sleeping indoors. We're fine. But somebody's going to have to figure that out at some point. That or tent cities.
The other challenge is if you have Section 8 properties. Dealing with Section 8 in Jefferson County is its own beast. And when you get it, you're good, but y'all do Section 8?
Oh, thank you.
Yeah, you got to be in.
We
Yeah,
do one.
you got to be in. You got to be in the wait. You got to be patient with
We
Section 8.
inherited one.
You didn't volunteer it.
Those who do property management, what's your tenure target? So in a winning situation, how long does a tenant need to stay for your investor or yourself to win?
Well,
I'm not.
Here, why don't we hold
Yeah.
why don't we hold questions till the end? Y'all good with that? Yeah, hold on to that, and we'll come back. We'll just keep the flow going.
Okay.
Just biggest opportunities, areas, or markets, or
Okay.
strategies.
Okay, probably the biggest opportunity now, I think, is there's more investors that have left the market. So I think for us that are still buying, I think the prices have dropped some. I think there's more opportunity. I've noticed that maybe in the past couple months, offers that I've put in that I did not get, the person who beat me out ended up not buying it, and I got a call back. So that's kind of fun. That's good. So I've noticed that. Challenges, I feel like there's some challenges now, but I mean, I think if you buy the property right and you put a quality rehab and you price it pretty well, it's going to sell.
Cool.
I mean, and it's kind of that simple. So if your property's not selling, it's either a bad rehab, bad location, or it's priced too high. And adjust it and get rid of that property and learn a lesson from it. That's what I would recommend. Because I had those too. I've got one right now that I can't get rid of, and so I'm about to drop the price.
How long do you go before you drop the price?
It all depends on how much activity I'm getting, and the feedback I'm getting, and the area and what I anticipate it doing. But probably once I've had, used to, I would say if I've had 12 showings and it hasn't sold, I need to drop the price. Now it's more like 8 to 10, not as much activity, So, 8 to 10, if it hasn't moved, I usually start to adjust the price.
You should be getting offers
Yes.
at 8 show. I mean,
Yeah.
if you're not, absolutely.
Something's wrong.
Can we run on that thought process? I actually had a separate note.
Okay.
Like, I would love to hear any shifts you're seeing in the either availability of inventory on the market, whether fixed, flips, rentals, turnkeys, and I want to know how demand is from buyers. So what are you seeing in the marketplace as far as inventory, and what are you seeing as far as demand?
So inventory, of what I'm buying or what I'm trying to sell?
Let's do both.
Okay.
Yeah.
So I think inventory has picked up, right? On the market. There's more on the MLS. I know that. For me, there's more opportunity, like I just said, which is great. But it's also kind of scary because like we've been fighting for houses for 2 or 3 years, and now there's more opportunity. It's like, should I keep buying? Should I? So there's a lot of uncertainty, and even in myself and in the market. So I would try to be cautious, but I'm not running scared yet either.
Yeah.
I'm just trying to be cautious.
How about from the buyer side? You just mentioned you kind of lowered from 12 showings to 8 to 10. Is that due to a lower amount of showings?
There's not as much activity. Like 2 or 3 years ago, a house hit market and you would have 12 to 15 in the first day, right? Now you're lucky if that happens in the first 2 or 3 weeks.
Yeah.
But there are certain areas that are still pulling a lot of buyers. So it's kind of bizarre. And we put probably on average 2 houses on the market every week. And they're scattered all over, probably averaging probably 400 grand, 500 grand, but they're anywhere from 200 to $1 million. And it's weird, man. You can put 2 houses in the same neighborhood on the market and one sells fast and the other does not. So it's kind of weird. So again, I don't have it, all the answers to that part, but I know that if you're in the right area, if you buy it right and you price it right and you rehab it right, it'll sell.
Perfect. Christina, from either the realtor side and or property manager side, what are you seeing on those same questions, kind of as far as inventory of, you can take it any way you want, either retail market or renter inventory or rental inventory?
Go all over the place,
can I? Open-ended question.
So regular residential sales, definitely inventory has gone up. Definitely stuff's not staying on the market as long, but we're hitting our spring season now. So that's great. It's really hard to start a flip in November and then you're done by, January. It's just going to kind of sit there. If you start in October, it's just quiet. So it is picking up. There's some multiple offers on some things. I'm seeing that more in the 250 and below. Really 100,000 and below is definitely multiple offers. Sellers are just
Fixer uppers, or are they move-in ready or no?
Some of them, and some of them are not move-in ready. But yeah, and then also I'm getting strange cash offers on people I had no idea had cash on them.
Like out-of-state buyers, or
no, just here, just like.
Are we talking about Bruce?
No, it's just they just had money and they just want to buy 150. Yes, and then
investment properties. Okay.
Or no, one like owner
okay.
occupants, and then strangely, your old stomping grounds, Grayson Valley, picked up. I've sold 2 or 3 back there. The houses, not the townhouses. Buyers are still asking for closing costs. VA, FHA, if you are flipping, make sure your house passes FHA and VA. And if you don't, you need to get with a really good lender. My favorite one's over here, and he can tell you exactly. I mean, Bruce is an appraiser, and if it doesn't, don't even waste your time, because that is a lot of our buyers right now are FHA and VA, right? I mean, you pretty much.
I don't do a lot of
ish.
FHA, but I'm happy
your
to,
houses
yeah.
are
But
FHA ready.
yeah.
What was the other question?
Seasoning requirements is a problem with FHA because 90 days.
You got to wait. Yeah, and you're so fast.
Yeah. Well, I tried to. Yeah.
You're wheeling and dealing.
Are you seeing any, just to feed off of that thought a little bit, are you seeing any changes in how realtors are doing business with the new law and the split of the closing costs and who's responsible? Has that hit at all?
Well, first of all, a lot of realtors are dropping out. So that's kind of a weird thing. Same as investors. So, yeah, a little bit, but not a big deal. It's not really a big deal about that. I mean, and that's a whole nother panel session, but we just kind of tweaked it and figured it out, and No, not really. Now I will say some investors have wanted to try to unload some of their portfolios, and they have said, I'm not offering a buyer's agency fee. And I don't agree with that. I think you lose a lot of buyers. You just do. I don't care if you have cash or don't have cash. So I have seen that. So their stuff does sit longer because they're not offering that.
Cool, great.
Yeah, who wouldn't offer that?
Hey, I mean,
I don't know. It blows my mind.
you're trying to sell a property. Lindsay,
I'm paying commission.
yeah. You talked a little bit about investors and all of this question already, but I'd love just to kind of hear a recap of, are you seeing an increase in like potential investors coming to you looking for properties? And then I'd also love to hear from the renter side. Are you potentially seeing changes with the number of applications and demand for houses that you guys have?
We are, but I think majority of on the rental side is just the seasonality, like earlier, and that's just normal. I think you can go to any year and see when the tax returns hit. If you have any kind of rental properties, that's when you're going to get the influx of applications and potential tenants. We've actually seen, like on the purchasing side, our acquisitions team back there, they have been running and doing a great job on getting in front and getting our inventory numbers up since we've seen our investor activity increase over the last, I'd say about 12, 13 months, beginning of last year. So we've seen that. And just in general, like you said, the properties on the market during COVID, it was less than a month. Then it got to a month and a half. And last time I looked, we're sitting at about 3 months inventory in the central Alabama area. So yeah, there's definitely more inventory out there just in general for owner occupants and buyers. But we have, like I said earlier, we've seen a good bit of investor demand increase. And I think that just really comes from just rate acceptance, right? There's no way that the rate's going to go back down below 5%. And so I think people have kind of come to terms with that and decided to move forward with the properties. And I would imagine that if with the volatility in the stock market, if that continues, we'll continue to see an increase in investors, because those tend to coincide. Is when the market gets a little bit more volatile, a little bit more unpredictable, is when people seek just that the purchasing of assets to hold. So I'm sure that'll continue to increase.
How about you, Bruce?
From an appraiser, I can't really say the inventories. I mean, just from the bit I see, it does look increased. When doing my appraisals, I will notice days on market because I'm looking at all my comparables and everything, and that has definitely increased. I mean, I'll do stuff in where, every comp, I might have 5 comps in the report, and they're all under 20 days or something, for a bit there. Now, I'll have comps that are 100, 150 days, that they've dropped, but they started out too high. They're priced, like Matthew was saying, people are pricing like they were a couple of years ago, and you can't do that. You've got to look at what's going on now. So I see that going on. As far as, investment, I've had more opportunities, like Matthew was saying. I might buy 2 or 3 or 4 a year. Nothing. I buy lower end stuff too. I don't do like what Matthew does. But I've had, now, of course, I say I've got 2 under contract right now, but I probably looked at 20, or people called me about 20 of them that I didn't even look at, because just to me, they're still very unrealistic. I just know that if I'm going to buy it, it's got to be a deal, so, but I am seeing some, so I'm hoping that I can, pick up some more deals here in the coming, 6 months or so. So, yeah. Perfect.
That leads perfectly into my next question, Bruce. I appreciate you. You read my script up here? I'm going to ask you guys to look into your crystal ball, okay, and predict the future. Where do you see us headed? Maybe long-term outlook. Think, looking beyond the next 6 months. Where do you think we're headed? Maybe 6 months, 12 months, 13 months down the road, and maybe add a little bit about what factors do you think will have the biggest impact, maybe on home values, on renters, on the market in general?
Well, I'm moving to Costa Rica in a couple months, so I'm not sure. No, I'm going in a couple weeks just to look. So anyhow, but no, I just think, and we were talking about the uncertainty. With the one thing that people, businesses, everybody hates, especially in the real estate market, is uncertainty. You just not knowing. So I'm not optimistic in one way, but I'm optimistic in another. I'm not optimistic because I think we're probably heading into a recession, and I don't really see the rates coming down anymore. Just me. However, it's like the last recession, I lost everything. But I learned a lot. I learned what not to do. But Matthew made it through that recession, selling houses all the time. But he was smart and he bought right, didn't do 50 a year, so you can do it. And I think there'll be a lot of opportunities coming. So that's what I'm hoping for. But I just think you need to be really cautious, because just to give you an idea, when the last recession, a lot of people, are younger and they weren't even here, for the last one. But I've been through a couple of them. But I had a large line of credit, and I went out and I just bought 3 houses and Homewood and expensive stuff. And then all of a sudden the bank starts calling in lines of credit, which I didn't even know what that was, and so you can get caught real quick, and so I would just say, watch your debt, and just be real careful that way. But I think there'll be opportunities. So
Great. How about you, Lindsay?
Yeah, the crystal ball, it'd be fantastic if we had it. I don't know. Honestly, I do think that you're absolutely right. I think we are headed towards a recession. I think that if inflation continues to increase, then that's just going to put more pressure on residents. If you've got rental property, it's going to be even more of a reason to be cautious. And I think when you're doing any kind of evaluations, whether you're looking to flip it or whether you're looking to just buy, hold, and rent it, I would take at least 10-15% off of it in your just assessment, just to err on the side of caution. If you think that the property would rent for $1,500, assess it at a $1,250, just to make sure that the numbers still work for you. That way, in worst case scenario, you can still cover your debt and maybe even make a few dollars. So that's what I would recommend. But man, the crystal ball, that's really tough.
I know, I wish I had one.
But I think that's one of the great things about real estate is that it is very, it's not recession proof, but it's recession resilient. Like it's going to bounce back. It's going to ebb and flow. This won't be, like you said, you've been through several. So, it's just not going to be the end all be all. You just need to make smart decisions.
Perfect.
Okay, so first, residential sales. Again, I don't mean to keep pointing to Ian, but he is my lender. So I go off what he says. I trust him. We've worked together for 20 years. He's always on it. And I think he does, so I'm going off him. But interest rates are going to go down a little bit. I do think that a little bit. And I think we are going to get busier in the spring and summer market. It's just quiet right now. And I think when school's out, that's when it jumps. And then I think we might see multiple offers on some stuff because our inventory is low. So then people are going to fight over some stuff. I do think that a little bit. Foreclosure world. Let me back up. With the recession, yes, probably we are going to. I'm a weird one. I like the recession. We were just talking about this. I made the most money in the recession as a realtor because I am a foreclosure realtor. And so I'm not afraid of it because I have the mindset of, okay, well, I'll just shift and do this, or I'll shift and do that. I'll just shift whatever the market's doing and figure out how to make money. So foreclosures are.
That's the key, I think, right there.
That's right.
You have to shift.
You just kind of you've done it. I've watched you and Rebecca do it. Yeah, you just kind of we'll do this. Yeah, because you bought rentals and stuff. I don't think we're going to get a bunch of foreclosures this year. I think we're just gonna. I think we're going to have a pretty good summer, honestly, better than what we think it's going to be. But I am also on the cautious side because it's just so strange right now.
There's a lot going on.
Nobody wants to put their home on the market because they have a 3% interest rate. And so why would I sell it when I have that and get a 6% interest rate? Well, but if you were carrying a lot of equity and you're sitting on 100,000 or 200,000 and you can put all that money down, you're almost making a lateral change. So your house payment, so as a realtor, we have to sit down and explain that. Well, if you do this and you do need up, then that's what we'll do. We'll sit down and figure it out. Or, you get with a lender and they show you the numbers. So I'm an optimistic person. I think we're going to be fine.
I love it. Matthew,
Yes, sir.
what do you think?
So, I mean, I don't have a crystal ball. I'm cautious, but I feel okay about things. I really do. I think, again, if you're cautious and you buy the property right, you'll probably be okay. I mean, it really can be that simple. It really can. It really can be that simple. Yeah. And if you're not, run for the hills.
That simple.
Yeah.
All right. Well, guys, what questions do you have for the panel? I want to open it up. We've got a little bit of time left. Anybody have a burning question?
Okay.
What changes are you making in your business? Looking 6 months, looking a year out and everything. Are you anticipating any, changes in the way you approach your segments, markets, different price points, different areas, any of that kind of stuff that you're already thinking about?
Well, I haven't made any changes yet. I've been kind of keeping on like I've been doing, and we're still doing fine. I feel like maybe when I made it through 08, it kind of gave me some confidence that hey, if I can make it through that shitstorm, I can probably make it through other messes, right? So I just think that I haven't made adjustments yet, but I'll be ready to if I need to. We have bought a lot of passive income properties and mini storages and things like that. So, we built a pretty big company of assets that hopefully I feel pretty good about.
Diversified.
Yeah.
Just another quick follow-up, guys. I keep hearing 2008 and so many references from you guys and everything else. Do you really see this anything like 2008?
I personally don't. No. I don't personally. But it gave me confidence that, hey, if I made it through that, I feel like I can make it through just about anything. Because those were stressful times. It really was.
And when we say 08, we kind of really mean it's a window. I would say 08 to 12, 13. Yeah, it was long. Yeah, it started in 08. It didn't sting really until 09. So it was really kind of a window of a couple of years, not just 1 year. No. And like I said, the banks learned their lesson.
The banking was really, that was
That was the reason for it.
exactly.
Right, was the real estate and the lending.
Ian didn't like that.
Not your bank.
I'm so sorry.
Those guys are out of business.
What else, guys? Who has a question?
Hey, Bruce, would you say your appraisals, retail is down, but what unique properties, what was that are up?
As far as, I'm trying to think what I did say. Do what?
Bankruptcy.
Oh, yeah. Now, I do bankruptcy appraisals.
Bankruptcy.
Yeah. Unfortunately. And I've got 2 or 3 bankruptcy attorneys that they've been sending me, 1 or 2 a week, unfortunately. So, yeah.
Real quick, are those properties coming onto market?
No.
Or is it just for the bankruptcy
It's-
proceedings they're trying
it's-
to get a value to?
Yeah, it's for the bankruptcy proceedings. Basically, these attorneys are pretty good, and the way it works is if the people are trying to save their house, the attorneys usually go by the tax assessment, and tax assessments can be off, tremendously. And so these attorneys know they can look at it and go, I don't believe your house is worth anywhere near that. Let's get Bruce out there. We'll get a lower value. They show that there's no equity in the house, so they can keep their house. So that's.
Yes, probably for the realtors here. At one time, several years ago, it was a pretty big advantage if you carried a mortgage. I've got some rentals that are paid for. One happens to be a 4-2 in Pleasant Grove. For the Lindsay that does the out-of-state investors, and then also our realtor here, what would I look for if I carry the mortgage and become the bank and sell to the buyer. An investor side, what's the investor out of state? Because those guys, I don't know about y'all, but they call me all the time. I get okay, how they got my phone number, I don't have an idea. But anyway, if I could get the realtor and the investor to talk about that, what would be the pros and cons if I was to carry a mortgage on a paid-for property?
You go. So, I'm sorry, I missed the question though. You
I couldn't really hear it.
Yeah, so he was asking, he's got some free and clear rental properties, and he's considering seller financing them, holding the note.
Right.
What are the pros and cons, and have you had investors to all that? Because on the residential side, it's a pretty big thing.
Yeah, it is.
Absolutely.
Like the current markets, what can they expect?
I mean, there's just a lot more liability. There's a lot more risk that comes with being the bank and being the financial institution. But our investors don't typically do that, right? Most of them are doing either DSCR or they're doing conventional loans. So that's not really relevant in ours. Do you want to speak to that a little bit? I feel like you could probably shed a little bit more light on that.
If I was to offer them the same discount points, great. Let's say your investor got more than it costs. Offer them the same type.
Are you underwriting it the same as a bank?
I will say this, and after our last question, like, what are we going to see? A crystal ball? I think we will see an increase in hard money lenders and people like you, like, just have it. Yes, there are investors that are doing it. It is a thing. I'm seeing anywhere from like 10,000 down, non-refundable, 2 points. I mean, you might know more. 2 points up front, and it works. I mean, I'm seeing a couple that are paying off in like 2 years, 3 years. They just have cash like that, but they can't get it at a bank.
We had Scott Jelinek was here a few months back. He talked about slow flips. That's essentially the idea, is to seller finance properties. That on YouTube, Brian?
Yeah, I can give you some guys that are doing it. I mean, they do it all the time.
Yeah.
I don't necessarily want to sell mortgage. I want to have it just in my portfolio.
I will tell you this: record your mortgage. Record the mortgage.
What else?
Matthew, I was here for your first several months back, and one of the things you mentioned were that you get the majority of your purchases from real estate agents that come to you. And I mean, you're at a different level than probably the majority of the people in here. Think back to when you were maybe like been in it like 5 or 6 years.
Okay.
Are you, and you say, you got to buy right. Everybody, tries to buy right, but is that where you're still getting your MLS off market? I mean, as far as when you're trying to buy a house,
So when I was a few years in, it was a little different. I was looking in the paper. I was looking in the classifieds, thrifty nickel, right? So
Back in the
those
day.
things are gone. So if I was 5 years in it today, I would do it exactly the way I'm doing it. I would go and contact every realtor I could, every wholesaler I could. I would beat the doors down until I had enough flow of deals coming in that made me happy. And then when you think you have enough, keep working, man.
Okay.
So that's what I would do.
I would say, because I'm very small scale, I've done that for years. I've got probably a dozen realtors, and he's got 200, but I've got 10 or 12 that call me first, and that's where I get 90% of my deals.
It works.
My question is for Matt. Thanks. With you got like 5 houses projects going on, and you're working your subcontractors, and you got 5 houses sitting waiting after you finish these first 5, how are you retaining your subcontractors? Are they strictly working for you?
So I've got a lot of all the above. I've got some that work for me hourly. I have some that work by the job, but what I try to do is find the ones I like and then kind of grab them and hold on to them. And whatever I need to do to keep them, I try to keep them in-house as much as I can. So, you know, by
For majority of them.
checkbook, by a gun, no, but really I do try to like hold them hostage in a nice way by just whatever I can do to keep them around. Meaning, if I need to have them charged by the job or by the hour or by the day or by the week, it's usually one guy and like his crew, right? Of 2 or 3 or 4 guys.
Okay.
Is that your question, right or no? How do I keep them around?
Well, my thing is like
Yeah, I keep them busy. You keep them busy. Keep them busy and keep them paid.
yeah.
That's how you keep them around. Truthfully, like that's how you do it.
But majority of them is like a
so
painter.
Every morning I wake up knowing that I've got to have enough projects going to keep everybody in my little empire busy, and that's what keeps me rolling every day.
Okay.
So I'm chasing deals just to keep my guys busy, and the end result is I get paid. Right after everybody else gets paid.
So they only work for you.
Yeah. Yes, and that's how it works in our company. Yeah.
Okay.
Even the subs, like even a plumber, whatever, like even a plumbing company, I want a plumbing company that only does plumbing for our houses. So I've recruited the right people over the years, and I've managed to keep them happy enough to stay.
That's awesome.
Yeah.
Thank you.
So thank you.
What else, guys?
Okay.
So as far as growing a flipping business like that, at what point, like how many houses at a time is enough to keep everybody that you?
So for me, I need 2 houses per crew. So like today I've got 29 flips going, right? So I know I need 2 houses per crew. So while I'm pulling inspections and permits and all, like waiting on inspections to happen, or if I've got all the roughs in one house happening, I can move them to a new house to start on the new house, all the framing. And then when all the drywall at their old house is done, I'll move them back to that house. So you need 2 houses per crew is usually how we do it. Make sense, kind of, right? Yeah. Okay.
A
Okay.
yes or no is sufficient. You don't have to tell
Okay.
me any trade secrets. But I bought and sold houses in the late 90s with a partner, and we did 15 of them in 18 months. And the word flip had never been invented yet.
Okay.
There was no such thing. But like you guys, we could drive a neighborhood and identify a house that was the right house. It's empty.
Okay.
We know it's empty. Sometimes the meters are gone or out of the meter socket. We had to go to the courthouse back then and find the owner and phone number and call them. And we connected so often. Well, today we ride neighborhoods every day and find these houses. I've got a list of 20 addresses right now that are that need to be flipped.
Yeah.
And we can't find the owners. We look at the GIS maps. We see that somebody is or isn't paying the tax records. I see the owner, but the only address is the address of the property, and my notes get returned. We send them a letter, and so
I'm going to tell you how I would do that. I would stop the car and I would knock on all the neighbors. Okay.
And we are,
and if you can't get it that way, then that's usually the best way for me to get it.
So they're wrapped up in an estate, or somebody has passed away.
Usually
or
someone knows something. You just got to find that somewhere.
Yeah.
And then you got to piece it together, because somebody could own the tax deed, and then somebody owns the fee simple, and then you got to bring them together.
Right.
So you can't sell one without the other, and that's the other trick. But you can dig deep. It is hard work. As a realtor, yes, I mean, take over the question.
Well, our incentives
As
are
a real,
different.
it is. You're going to
for
have
us,
to
it's
dig
primary
deeper.
business.
You need to get with a title company, and I mean, a lot of title companies will do it for $250 and figure out who the heir is and all that. I mean, it's very tricky with probate, will. If you don't have it, that's a whole other ball game.
Right.
But if you can find just one person, and then and neighbors usually know. It's the neighbors that know. somebody. But if it's yeah, neighbors tell you everything.
Yeah, yeah, we get it. It's just run, you can see that some entity is paying the tax. And it's typically the mortgage company is, and then,
Okay.
I might have come across Spartan Investments, and so when we see a
Yeah,
name, or I
yeah.
see a name, I then do the GIS map, and then boom, it shows everybody's, you
Yeah.
can see, you all of a sudden, you realize how large the.
And you can buy tax deeds. I mean, that's a whole nother class, but
Right.
you can reach out and say, hey, I'm interested in buying your tax deed and see if they,
Yeah, I just.
I've had some mysteries before.
Yeah.
I get it. I really do.
And we have found some beautiful, these properties need to be.
I just need those addresses, man.
All right, guys, we got time for one more. We're gonna have time to network and connect afterwards.
So this is a property management question. Got some seasoned property managers, guys. So, what's a best practice that you know now that you wish you knew when you first started in the property management game?
God, that is a great question. And it is not just one thing.
No, I know.
It's, man, there have been a lot of mistakes. I honestly, I mean, I'm just trying to narrow it down. I would probably say, don't set up payment plans with residents. That never works. When we were first starting and we had, just 50 properties, we would work out. It's like, oh yeah, sure, you'll pay me half on the 15th and then the end of the month. And that just creates a behavior that's really hard to change. COVID exacerbated that. Like there was no reason to pay rent on time for an extended period of time. So it has been very challenging to reiterate the behavior of you pay on the 1st, you're late on the 5th. And so we don't do any kind of payment plans at all with tenants. And the ones, when we went back and looked at the tenants that were true to the payment plans, it was less than 5%. It was just not. And then the second thing would be just document everything. It is a very litigious industry, and we have been served and sued over the most frivolous of things. And so I document everything. And make sure that you are in a platform that forces documentation. Because we've definitely made that mistake too. I don't know. We've made a lot of mistakes going back. That's a really great question.
yeah. I'm going to go opposite. She handed to owners. I wish we would have walked the houses more and been more picky about the condition of the property. Like it benefits a landlord to really take their time and make the house really good. Like caulk your trim, and paint it good. That way you don't have to go back and do all that, or put LVP instead of carpet, or, just stuff like make sure the house is good quality before anything, because then we have to go through all that.
Thank you.
All right, guys, give it up for our panel. Unless, Brian, you got anything for them? And I want to welcome the man to the stage, Mr. Brian.Trippe. Come on down.
Everybody, how we doing?
I'm excited to be here. Y'all did awesome. If you don't know who I am, I'm Brian.Trippe. Hey, give it up for Jamie. Did Jamie do awesome? Jamie did so great. Look at the crowd we got. We got Mike in the building. We've got some awesome, we got Rebecca. Let's go, Rebecca. What's up, James? Paul? Awesome crowd. Ernie? Awesome crowd. Give it up for Matthew. Did Matthew do awesome tonight? Christina, great job. Lindsay and Bruce, y'all did awesome tonight. Super thankful for y'all coming out. Real quick, I just want to draw your attention before we go. Next meeting is on April 11th. I know Jamie went through all this. We are going to have an awesome guest speaker. Ashley Denmark, Antonio Denmark are going to come talk to us about how to get going in real estate. Who's never done their first deal? I've never done a deal. Raise your hand. Everybody in here has done a deal. Well, then that's not the one for you, for sure. because they're going to teach about how to do your first deal. So come back for that for sure. And then next Tuesday, I've already gotten some text messages or some emails. Next Tuesday, a week from today, is our small group. What happened? It's March. It's March. Sorry, that's wrong.
March 18th.
It's March 18th. Yeah, it's the same date though. March 18th, next Tuesday, a week from today, we're going to have our little real estate small group. If you have never been to one of these, I know if you have been, raise your hand. If you've ever been to one of our, there's like a bunch of y'all in here. Come check it out. We're just here to give as much as we can. We try to help you with your business. If you have an existing real estate business, we try to help you with that. Try to help get you going. If you have any challenges, we want to try to help you the best we can. And then real quick, how do you find somebody that you can't find? I literally just did a video on this like less than a month ago. If you can't find them and you know it's a house, lots of great tricks. Knock on the door. Put a FedEx envelope on their front door, right? If that doesn't work, put your own We Buy Houses sign right in their yard. Promise you somebody will call you eventually. So there's a lot of awesome tricks that you can do to find somebody. It's worked because eventually someone's going to call you saying, "Who are you?" "Oh, I'm so sorry. I was looking for the owner." It works. Trust me. What else? I've done it. What else? Are we good? Does anyone have any questions for this great panel? I'm going to dinner at Baumhauer's right now. If anyone wants to join me, I know we're going to have a couple from up here that are going to join us as well. You're welcome to do that. With all that being said, y'all are dismissed. Thank you so much for coming tonight.